Good afternoon from London and welcome to Private Funds Industry Live, expanding private funds in global markets. Today we are looking at the key challenges fund managers need to consider when entering new jurisdictions, the benefits of expanding into new geographies, and some of the key characteristics of the fund markets in the US, Asia, and Europe. I'm delighted to be joined by three speakers with a range of backgrounds and experience on the topic who will each be sharing their thoughts and insights for the next 25 minutes or so. Anne, would you like to start us off with a brief intro?
Sure. Thank you, Colin. So I'm Anquillare. I'm the head of Fund Services North America for CSC. Been in the private capital industry since 1993 and seen a lot of change. So happy to be here chatting with Chris and Amie and sharing our thoughts. Thank you.
Thank you. Chris, do you want to give us a brief intro?
Absolutely. Chris Kula here, partner at Dentons in the New York office. I focus on fund formation matters, asset management, and portfolio level transactions. I've been in the industry on the legal side, both in-house and working for various law firms for about 17 years at this point. So happy to join. Look forward to the conversation.
Perfect. Thank you. Amie?
Hi, thank you for this opportunity. It's great to be here. My name is Amie Patel, and I'm the partner and CEO of Elevar Equity. We are a fund manager investing in both India and Latin America, so we get to round out the panel with an actual fund manager experience to help navigate this very complicated space.
Perfect. Thank you, everyone. Very lucky to have so many years of experience on the panel. To kick things off, I guess, helpful to set the scene a bit. In terms of location, there's obviously been a shift away in focus from Caymans, and I think, Chris, maybe it would be helpful to outline the current direction of travel and which locations are being talked about currently.
Yeah, absolutely. So yeah, there's a couple of trends that we've witnessed certainly over the last couple of years. Those trends have accelerated, and that would be particularly Luxembourg is kind of a good jumping off point, the jurisdiction that we see as a gateway to both investors and investments abroad, particularly in the EU region. We've also seen Ireland is kind of a up and comer, given Brexit and given certain reforms they've made to their institutional limited partnership rules. And you know, there's also a focus there that keys to the European region. As far as the Asian region, we've seen Singapore take noticeable steps towards developing their private fund regime, as well as basically there's been a little bit of a trend towards onshoring, which has maybe lent to more Singapore funds being formed, as well as there's legislation there where they've created new flexible fund structures that have also kind of helped in terms of interest in that jurisdiction. One of those is called a Singapore Variable Capital Company.
Perfect, thank you. And maybe I can come to you in terms of, I guess, the big picture globally. Are there any trends you're picking up on in terms of locations and jurisdictions?
Absolutely, and it's interesting, as Chris pointed out. You know, the mindset or the perspective of the regulator is really important. When a firm forms a fund, you're talking 7 to 14 years. Mm-hmm. So knowing the direction of the regulator, are they leaning into the industry? Are they being supportive of the industry? You know, are they providing a comfort level for investors with regards to not only privacy, but, you know, AML, KYC, the investors need to know who else is in the fund with them. Is super important. So I'm excited because these other regions that Chris was mentioning are having a regulator lean into the industry, want to attract firms in that industry, which is exciting. The other thing that we're finding super important is that vendor ecosystem. Okay, so yes, you need to have an understanding of the regulator, but you also need to have a vendor ecosystem that's established within that country, within that region. There's no replacing local knowledge when it comes to these aspects.
Perfect. Thank you. Great answer.
I would agree with that 100%. You know, the vendor, you can't state the importance of the infrastructure being there in terms of access to legal, accounting, tax, compliance structures, and vendors, and basically just understanding the local knowledge in terms of how long it's going to take to both set up a vehicle, if it's a parallel fund or even an investment manager in that jurisdiction. Oftentimes without that local knowledge or without that service provider, the time frames are just underestimated, and kind of the costs even involved, and the amount of buy-in that the client ultimately has to think about when considering those jurisdictions really doesn't get fully taken into account without that help.
Thank you. Amie, maybe I can come to you. We're lucky in the sense that you're based in Cayman, and I guess my opening question was talking about the move away from Cayman and the range of other locations. Do you want to maybe talk a little bit about your experience of
Sure.
based?
Yeah, so we're a little bit contrarian to following the new trends because we took a decision as a fund manager to double down. We've been investing through Cayman for the last 15 years. And as we evaluated options to think about another jurisdiction for our newer products, it became evident to us that we needed to create, quote unquote, an established presence in these new jurisdictions. And for us, that was a little bit of a challenge to meet while also having some of our products out of Cayman. So we took the decision to stay there for better, for worse. Now, it's not an easy jurisdiction. There are a lot of questions. There have been a lot of questions around whether or not that's the best place to invest through. Cayman was on a list for a little while, and now they've swung to the other side to be a lot more restrictive and making sure that they dot all their I's and cross all their T's, which then passes down the responsibility to us as a fund manager to meet a lot of those obligations. But we are long Cayman, and I think on the team, it's who gets to draw the short straw to travel there and meet with our service providers.
Yeah, definitely. And coming to Anne's point, which was a good one about knowing the direction of the regulator and how the regulator is potentially leaning in to that jurisdiction, do you feel confident in Cayman that that's the case and going forward? Amie, sorry.
To me? I'm sorry.
No, for Amie, sorry, just on Cayman.
Oh. Just for me, for where we think. Oh, sorry, I missed that. Their KYC and AML laws that they've put into place, the requirement for audited financial statements at the GP level, they have a lot more restrictions around reporting requirements, et cetera, of all sort of helped make sure that they're positioned and viewed by investors as being a very safe haven. It all comes at a cost, and that's a cost that we as a manager have to bear. So that's the flip side. So there was a switching cost involved with us moving to another jurisdiction, and these are the things that you need to weigh as you think about, Jersey, Singapore, Netherlands, Cayman.
Yeah.
And I think that brings up a really good point because, again, for Caymans, private capital is a very important industry for them.
Yeah.
I think it's right up there with tourism. So Luxembourg, very similar. Netherlands. Ireland is trying to get access to that for their economy. It is a conscious decision by the government, by the regulator, that this would be an attractive industry to be a part of. Same thing with Singapore. So that's what I mean by leaning in. Like if it would be risky to find a jurisdiction where it was not a supported strategy by the government, by the regulator.
Yeah, definitely. Great point. Chris, maybe on Ireland, I think that's equally true there, right? In terms of what the government has done post-Brexit.
Yeah, that's right. There's been reforms in late 2020 to basically put the focus more on private alternative investment funds as opposed to regulated funds, which is paving the way for the industry to kind of take notice and potentially maybe there's some competition even between Ireland and Luxembourg in terms of a gateway to the EU for funds. But that's certainly to be determined. But yeah, I think both kind of have positioned themselves well, and there's certainly to Anne's point a lean in by the government, and there's a lot of good aspects to Ireland. One of which would be the workforce there, the educated workforce. That's helpful in terms of having access to to people that can move forward on a long-term basis.
Definitely. And maybe to bring you back in, on the flip side, what advice would you give to funds and GBs when a region goes cold? Because obviously we're talking about some of the more popular and up and coming regions, but also the opposite can also be true.
Yeah, and we've all obviously seen this with everything that's going on in the world over the past few years.
Yeah.
So I look at it in two aspects. So there's the investor side and the investment side. I think you can be more flexible on the investment side because you can get in and out of, obviously if you have to divest from Russia, you can do that on the investment side much, I'm not going to say it's easy, but easier than on the investor side. So that is something that a manager, when they're looking at expanding into other regions, do they want to tackle both the investment and the investor side at the same time? I don't know. That's a lot.
Yeah.
Yeah, it's much easier on the investment side. I agree, because you could have an existing vehicle that has concentration limits, and you could even adjust those concentration limits subject to limited partner advisory committee approval in certain cases that can increase or potentially decrease your exposure if you divest portfolio investments. So I agree on the investment side. The investor side, it's harder. One potential way would even be a continuation fund, but those are more wholesome, involved structures to implement.
Yeah, definitely. I guess we've spent a fair bit of time talking about the wheres. Maybe it'll be interesting to move on to the why and look at some of the key considerations for fund managers. Chris, maybe if we can stay with you, looking at the locations that we've spoken about, Singapore, Ireland, others, what are some of the key considerations for fund managers to think about when they're setting up shop?
So for the fund manager side, you're going to be thinking about the regulatory environment, the barriers to entry in terms of becoming registered, and kind of what that involves, because there's a fair amount of planning, action, and also whether there's a presence requirement. You can't outsource your ability to kind of be present in the jurisdiction. So certainly, if you're gonna have a manager that's AIFM or registered in a foreign jurisdiction, and that's going to be kind of under your asset management umbrella, it's a big undertaking to think about. So that's certainly one. The other is, as I mentioned, just the regulatory construct and whether it's a robust regulatory environment. That is particularly for a long-term investment. I think you want a more robust regulatory environment because it's going to, yes, there's a little bit of more of a barrier to entry, but that kind of cuts both ways. That can help your client long-term once they kind of get over the initial aspects that are involved there. And then it also just lends itself to credibility in terms of investors, right? There's a little more comfort that you're going to be in a solid regulatory environment, and that's really the trend. And the trend is also, by the way, going in that direction, even on the U.S. side with the SEC's proposed private advisor rules. So it seems that that's kind of the way of the world at this point, and that really would be a consideration. And the last would be basically support for the private fund industry, particularly if you're an asset manager that focuses on funds.
Definitely. Thank you. And maybe I can come to you. What do you feel should be on the checklist? Credibility is obviously up there, regulation difficult to unpick and varying, but in terms of maybe 3 or 4 points to really kind of focus minds in terms of those considerations.
Absolutely. So one of the first things that we talk about with our clients is, is this part of, and I'll use this term loosely, but the target operating model of the firm? Is there a top to bottom commitment to expanding regions, either on the investor side or the investment side? And this goes back to Chris's point. If you don't have the right intel as to the effort that it's going to be required of the firm to expand into those regions, sometimes they make the decision and then they get cold feet. And that's the worst thing that can happen. So that the holistic commitment of the firm into going into the region, and then how is it going to happen? Who are you going to use? What people do you need to add? Because it can't all be outsourced. It kills me when I get the phone calls and like, yeah, we want to do this and we want to hand it off to you. I'm like, no, thank you.
I agree, and I've actually seen that in practice, and I've seen it not work out too well in practice because it just seems like, oh, we can easily do this, and there's no way to fully divest that aspect, particularly when it's trying to wrap it all under one umbrella and understanding what the left hand understanding what the right hand is doing, even with a parallel vehicle, even with just a parallel vehicle as opposed to a standalone fund that's kind of targeting that region.
Yeah. And timing, right? Because a lot of times they'll say, oh, we're launching a new vehicle and we want to set up a Lux as well. And we say, okay, like, do you need that? Are you might you be able to, and we'll get into the whole where money's coming from, because there's a tremendous amount of capital globally coming into our industry. But timing matters. So, when would be the right time to start accessing, European capital, APAC capital? Do you have to do it all at the same time? Probably not.
Mm-hmm. And when that question comes up to me, it's a really important point. I tend to tell. I mean, you have to have a pretty substantial investor base that you're expecting from that region or jurisdiction. I mean, I tend to look at a 30% at least of the fund you're raising. If you're, maybe more if you're, thinking about putting a sleeve. European sleeve or a foreign. It's just I don't want to beat a dead horse, but there's a fair amount involved. I think that's pretty clear.
Amie, do you want to come in on that point?
I was just going to say, for us, what we've been able to do is, depending on the LP and where they're coming in from, we have a majority from the US, and we've started to break into the European Union area, and we'll work directly with that LP depending on the check size and sort of the commitment, and finding a way to find comfort with the jurisdiction that we have picked and create transparency and work with them to meet their needs, as opposed to overhauling our entire back end for this theoretical check that we're going to get in the future.
Yeah, definitely. I know you've diversified your investor base. Well, you alluded to it there. Do you feel your base has allowed you to do that? And kind of looking ahead, how do you feel that journey will continue?
Yeah, I think because we've been transparent about why we've stayed with Cayman, and then we've gone on and gotten the layers of opinions and done the tax reviews that a lot of these investors, I feel like that's the stickiest point for them, is ensuring that the tax requirements and the reporting requirements are met. So any new investor coming in, as long as we can work with them to understand what those requirements are. Now, Europe, the list keeps growing and it's getting longer and longer with the reporting requirements, and we're still figuring out what that means. And I think we'll hopefully touch on that. But for Australia and Asia, it's been a fairly seamless process for us to stay in Cayman, ironically.
Mm-hmm.
We've been able to manage that.
And it's funny, if I could chime in on that point. I mean, I've seen certainly, look, I mean, Cayman, there are, and this goes to investor familiarity just with certain structures. There's just I've witnessed just a familiarity, which kind of facilitates investment in that direction, because if you know a structure in a jurisdiction and what it's up, there's just less friction to kind of continuing that, particularly if you're, there's just a less barrier. I mean, I've worked on, complicated. One would be an insurance dedicated fund, which is another type of sleeve, which in certain instances, it sounds really great, but the level of just ramping up to understand what that is sometimes, is a little more, makes it a little more difficult to facilitate investment. Not that it's a bad structure, but to your point, there are many investors, particularly some Asian investors, that really prefer a Cayman structure and continue to use it regularly.
Yeah. And maybe I can bring you in on that point of diversification on the investor base and how that lends itself towards different jurisdictions. Sure.
So again, we've all heard it, massive amounts of capital wanting to come into our industry, and it's up to us. It's up to us as an industry to be able to facilitate that. So I would say to you that, what we're seeing is the, I would call it not necessarily a competitive advantage anymore, because so many firms are looking to do this. I would say it's a competitive threshold. And, are you at the point in your firm's life cycle that you need to cross this? And that's when we're starting to get into conversations with our clients. Can we, because again, it takes a village. I'm not going to be able to answer every question at all. So, being able to partner them up with, boots on the ground. We've talked about the importance of actually having that regional or specific jurisdiction expertise. And then also, again, just cautioning them, make sure, like Chris was saying, make sure it's worth your while.
Definitely.
And understanding how to do, if for example, if it's transactions. I mean, if you're going to pursue a mid-market roll-up strategy in Europe where there's a lot of owner-operated businesses, you have to have the boots on the ground and a local presence through through service providers as well that can kind of help you execute on that, because that's going to be crucial.
Yeah. We've touched on it a few times, especially in terms of AML and KYC, but I guess the point about having a cohesive, frictionless global service provider is key, right? Do we see that being taken up by funds, and how important is that to this whole narrative? Chris, maybe do you want to come back in on that point?
Yeah, I think what it does is it helps kind of, if you're managing everything under one roof and looking at it as a top to bottom view, it's certainly helpful. It also helps with reporting. It also helps with just clear information that the C-suite and the top level has when they're making business decisions. I mean, I have experienced issues where, let's just say you have one fund handling the US side and one fund handling the EU side, and there's just not that level. It's not that same level of communication. Not that you can't do it. It's just, it's not quite as frictionless, right? So I think having that, particularly, for example, a fund administrator, if you are covering it all under one roof, it's just gonna make reporting and understanding across the both the service provider and with the client more clear. And as we know from as we're getting back to being more in person, being in person and more communication is probably a good thing.
Yeah, definitely. Amie, would you agree with that?
I would add a slightly complementary angle from our perspective. KYC and AML is critical. We invest in India and Latin America, and so our investors want to know, one, that our capital can go into those markets and come back out, that we're not soliciting capital from anyone, and seeing, because we have we strive to be an institutional investor. We're taking institutional capital. So there's that layer of comfort that we bring by having that process and going through a jurisdiction. But the fund administrator, who you choose, is extremely important. They do become your partner. The switching cost is high and painful, especially if you're a smaller back office team. Like Anne mentioned, you can't outsource everything. You do have to have a team in-house that keeps eyes on everything and manages these responsibilities. But depending on the size of fund you are as well, these are fixed costs. So you need to make sure that you're getting the right service for what you need. The costs get more, and they go up and down depending on the jurisdiction you're in. And and there's a lot of diligence that you have to do with picking the fund administrator that's right for you and the kinds of LPs that you have and the needs that you have that complements your back office.
Yeah, definitely. And maybe a quick perspective from you in terms of picking the right fund admin and how that plays into this whole story of jurisdictions and locations.
Absolutely. I mean, so for a long time, I was the owner of a fund administrator that was focused in the US. And it just became very apparent to me that, the fund administration business was going global. The need for having expertise in these other regions and peers, right? It's so comforting to have actual peers. That's the difference between two separate firms and working with under one umbrella. These are your peers. These are not your potential competitors. Yeah. So that was crucial in my decision in going with CSC.
Yeah. Yeah, perfect. We've only got a few minutes to go. I just want to remind the audience that we have time for questions, so feel free to put them in the chat. I'd like to touch on.
This is free advice. Ask away.
I'd like to go back to regulation, which is obviously a very sticky topic, but we've touched on it in a few different ways. Chris, you spoke about the SEC, the new rules. We've also got the SFDR in Europe in terms of sustainability. Reporting requirements are a big one, and I just wonder in terms of advice.
Throw in ESG too. Like if we're doing the alphabet soup, that's a big one.
Yeah. Well, do you want to give us a bit more on that?
I'm going to defer to Amie.
I mean, you're essentially an impact fund, right?
Yes, we are an impact fund. We're an ESG fund. We are a category 8 or 9, depending on how we land with regards to SFDR.
Yeah.
And I think for some of these alphabet soup titles, there are clear paths as to how you can create reporting structures. And for some of them, there's an array of new service providers out there vying for your business on how to report it out. And then with SFDR, I feel like it's still a little bit of a black box as to what is required on each layer and to whom you're reporting all of that information to. So again, going back to, we're a smaller fund manager in the business. And so be careful and cautious as to what you're signing yourself up for, and make sure that you don't use your own money to figure things out. That would be my 2 cents. Don't get a big, huge lawyer bill to ask a bunch of questions that other big firms are asking and let them pave the way. But they are requirements, and it's coming. And so within 5 years, everyone should be reporting on ESG in some form or fashion. Anyone getting money from the EU, and I'm thinking the SEC will head in this direction as well. There will be reporting. And so you should be thinking now how to build that muscle internally, because even if you bring a third party to the table, they're still going to need the information from you. So how do you build that into your process? How do you build that into your team, et cetera? So, we've been doing it for 15 years, and we're still finding ways to improve how we do what we do, because the list gets longer and longer and more nuanced with each LP.
And the key there, never overpromise and underdeliver in front of a regulator. You say you're this, you better have data and processes to back it up.
Yeah, I was just going to say the same point. You really can't overstate or over position yourself with respect to ESG requirements, and have to pay close attention, because there are a lot of, the SEC is focused on that, and there are changes abound regarding ESG. So
and it will hit your reputation and the trust that you have with the investors. I mean, again, these investors, these are blind pools of capital that they're committing to for 10 plus years at times. So trust is your one and only asset when it comes to these investors.
Definitely. We've also got the marketing passport rules as well, I guess. So in terms of potential flashpoints for 2023 and how they relate to jurisdictions, anything else aside from the ESG thing? Chris, anything else to look out for? Any advice?
I think with the EU, the marketing passport rules, I think you still, I mean, I'm not a European lawyer, but I know my understanding, you still have to be a little careful about the different EU country rules, and then pre-marketing. So, those are to basically test the waters. So I think if you kind of have your eye on those targets, those are just important things to consider, particularly if you're targeting the EU more broadly.
And I'll just do a shout out quick. I'm sorry, Amie, you go.
No, I was just going to say, as a manager, going to your earlier point about don't be saying something that you can't deliver on, that goes into marketing and pre-marketing. I think if you're not 100% clear on how to navigate those rules in these jurisdictions, where that LP is based, how you communicate with them, just that, I would say, just be much more cautious. I feel like there's more stringent rules now than there were 5 years ago.
Yeah, definitely.
And I just will do a shout out to, I know the SEC has been looking at the CFA Institute's Global Investment Performance Standards. It is also very much in front of the EU and APAC. This is a global, standard that's used by all the other asset classes. The ability for private capital to leverage this could be quite helpful in a marketing process.
Yeah, perfect. Okay, we're nearly out of time, so we've covered so much, and we could continue to speak, I'm sure, for another 30 minutes. But maybe we can just round up with a final thought from each of you, if that's okay. In terms of locations and jurisdictions, Chris, maybe we can go to you. What do you feel the future is going to look like if we're having this conversation in 2024? Would you be talking about the same jurisdictions? Do you feel there's a healthy outlook for the ones you've mentioned?
Yeah, I would think definitely. Any of the, yes, I would think that would be the case, because you're really, even when you're looking at these are longer term plays. So certainly within the next year, and I think in 2 years and for the foreseeable future, I would think, unless anything drastic changes, that those jurisdictions would still prove to be fertile ground for growth and for expansion of a fund or even an investment manager platform. I think at this point in time, we've had a pretty busy fundraising market in 21 and 22. It's a good time to kind of map out and assess your growth strategy if you're an asset manager, and kind of look in the next 5 to 10 years where you need to be competitive. And in doing so, just factoring in the SEC proposed rules, so you kind of have a sense of what the ground rules are in terms of changes there.
Perfect, thank you. Amie, no doubt you will remain long on Cayman. Do you feel positive about the emerging global landscape generally?
I am. I think my closing thought would be, and something that we've been reassessing internally, is what's a cost versus what's an investment with engaging in these jurisdictions. Because there's some things that are costs that you can move around and figure out if you can get a better service provider, et cetera. But there's a lot of room for investment here in working with a long-term partner and creating that trust and building that consistency with your LP base. So
yeah, definitely. Thank you. And Anne, then to you for a final wrap.
So I am curiously watching how, we know the competitive forces within the private capital market itself between investors and general partners and getting the performance returns. But I'm curious about how the competition between jurisdictions, like, does one jurisdiction say, let's say Jersey, I'm talking old Jersey, not New Jersey, but Jersey, say, okay, we're going to be the go-to for real estate. And, Ireland's like, okay, we're going to be the like, are they going to start carving up the market and, trying to attract firms in that regard? So that's going to be interesting.
That's a great point. We'll leave it there. And Chris and Amie, thank you so much for your time, for an insightful and engaging conversation. I want to thank the audience too for listening. The third and final webinar in our Private Funds Industry Live series will be called Decoding the Next Generation Fund Operating Model, and it will be held in February. I hope you can all join us again then. Thank you very much for your time. Goodbye.
Thank you.
Thank you very much.